So what I'm going to look at the sort of the EV side of it. Oil, copper, and lithium, and they're all very different. And copper's sort of similar to iron ore in a sense, because a lot of it is used in the building of China, in terms of China. And then you've got this sort of secondary uh, electrification issue for copper, and then lithium and oil have their own drivers as well. But I just wanted to highlight sort of I've got this long-term price chart with what I've called real copper, which is basically stripping out inflation. And looking sort of back over time, basically every time you get over $8,000 a ton, you just get this huge increase in the amount of copper available. So some miners just double and triple their production, and then it falls back down to sort of more normal prices. And I guess I'd say that more normal price is sort of in that 4,000 to 6,000 range. And then every now and again you get below that 4,000, which then sort of sparks people to start shutting things down, and at that point, the cycle then rolls back around and you come again. So that's sort of the overview for copper. But I sort of thought I'd talk first about the in terms of electric vehicles and this electrification. What's going on there, because that was this big pitch that you got from the investment banks when they were trying to convince you that to buy copper at $10,000 a ton, and now it's back to $7,000. This is sort of over the space of a few months, 6 months ago. And one of the big reasons they were talking about was this whole idea that electric vehicles are coming. They use 30-something% more copper in an EV than what you get in a car, in a normal car. And there's this also, you got this huge transformation of the whole the grid getting transformed from to getting transformed to renewable energy, and that would have all this extra copper use as well. And so therefore, there's this huge boom. And an infrastructure boom as well. So the thing is, once you start digging into those numbers, it doesn't seem to add up as much as like there's a truth behind all of them. But when you actually start looking at the numbers, it just doesn't add up in anywhere near the way it was being sold to everyone. So to start with, electric vehicles. You've got about 100 million cars produced per year, ballpark, and they use about 35 kilograms more copper. And so you multiply that all out, and you've got this huge increase in the amount of copper, which sounds like it's going to be fantastic, but it's actually only about 12% more copper than what we're using at the moment. And that's if you've flipped every single electric vehicle tomorrow to across to electric car, you would need 12% more copper. And you go, well, it's not going to happen tomorrow. Even if you're quite bullish on electric vehicles, you're talking about, say, a 5 to 10 year, even if you're really bullish, a 5 to 10 year transition where we move from 100 million cars of electric car to all electric. And so it effectively works out to be about 1% more copper per annum, which is, again, it's a nice source of demand, but it's not. It's nothing like what we saw, say, from the rise of China in terms of the amount of volume. We sort of basically needed to double the amount of copper as China sort of did all this extra building. Adding 1% more copper per year over the next 10 years is pretty doable. The next part you get to on the copper front is that driverless cars. So, I mean, this is your key assumption, really, is that if you assume that driverless cars won't be in any time in the next 10 years, then then you can go with that 10% more copper needed. If you do think, though, that driverless cars will start coming in, and therefore driverless taxis will become a big thing. Well, taxis drive about 5 to 10 times more than your average car. So if you're finding that that people are getting rid of their third car or their second car, and then just using driverless taxis to get around. Well, if you scrap 2 or 3 cars for every driverless taxi you build, you've got more than enough copper. You're actually you actually got spare copper left over from that. And the idea behind that, the rough maths I'm sort of using on driverless cars is, once the technology's right, a car rental is about $60 a day. And actually, car rental companies, they're only in normal times, they're only renting their cars out about 75% of the time. So you're talking about $45 a day effectively that people need, that a car company needs to make a profit on renting a car out. And if that car is going to drop and be idle for the rest of the time, now you're down to basically a car company needs to make $3 an hour to make driverless car taxis worthwhile. And 2 trips an hour, you're down to basically public transport type levels of costs on a driverless taxi, if the technology is right. And that's your big if. And Elon Musk has been promising it every year for the last God knows how long. He's talking about your Tesla will drive you to work, and then it will go off and it will go to work, taxing people around all day, and then it'll come and pick you up in the afternoon and drive you home. We think it'd be more like be more corporates, but the net effect is if that lasts more than 10 years, okay, you can keep those more bullish assumptions, but if it doesn't, then quite possibly less copper is actually needed. The next part is the whole grid transformation. And so, it is true that you will need more copper if we're building out grids in a similar way to what the national energy market in Australia is doing, where you're trying to build up big wind farms, collect or big solar farms, attached to that really long wires and transmission assets, and bring that into this big national market, and then try and use that to offset everything. If that's the way it's going to go, then yes, you need more copper. It's actually not that much. Again, you're sort of talking about 0.5% to 1% extra per year, but you do need more copper under that. The flip side is battery technology actually starts to take over, and you start getting to a more decentralized system. And we spoke about that a few weeks ago, about these microgrids that you're starting to see pop up, say in Western Australia, where they're you get 10, 20,000 consumers, and you put in a microgrid, some group batteries to store it. Maybe you end up using hydrogen, or you have diesel generators for real backups when you're missing your energy, and you basically come down to a smaller grid that is a decentralized version. And if we go down that route, then you're actually going to be ripping out a lot of the existing transmission and shutting down your coal-fired plants and all that type of stuff, which is actually going to add copper to the system. It's going to give you more copper supply, not sort of more copper demand. And so, again, it does look like the centralized way is more likely at the moment, but it won't take much in terms of battery cost falls to actually get to the point where decentralized could easily be the way that people go. Infrastructure booms. So there was a lot of talk, again, probably 2 years ago when Biden's infrastructure plans looked like they might get up. And it sounded like, yes, there's going to be, $1 trillion in the US of infrastructure. It was going to create, 110,000 tons worth of extra demand for copper, was sort of the rough estimates out there. Well, that's, a fraction, like there's 30 million tons globally of copper used per year. So that's, again, just a drop in the bucket in terms of the amount that's used in terms of infrastructure. And then lastly, you have recycling. So the recycling rate for copper is about 30% at the moment. And most of that is because not a lot of copper in China gets recycled. In the past, it's been more like 36% if you go back sort of 10 years. And if you look at sort of developed countries, you can get sort of 50% or above in terms of the amount of copper that is recycled. So to put that into perspective, if we could get the recycling rate, and China is, as Dave said, is doing a bit of a push towards trying to get more recycling into their commodities, and as they're pulling down more buildings, that copper's naturally showing up the same way as what it did for steel. Is that if you could increase the recycling rate in China to something more like 50% rather than below 30%, that would actually take care of all the copper that you need for all these EVs, and probably a fair chunk of the grid transformation as well. And then your final one as well, to add on top of it, we spoke a lot about these Chinese apartments. The average Chinese apartment uses about 130 kilos or 150 kilos, of copper. when you go the piping plus the appliances and all that type of stuff that goes into it. Well, if we're talking about a slowdown in Chinese apartment building, for every one apartment you don't build, there's 4 electric vehicles you can convert with the copper you've saved, without having to create any new copper. So yeah, so the net effect from all those is that, look, we've been under this extraordinary growth, and I've got a chart here just sort of showing the growth in copper production and recycling sort of added together. We've been through this extraordinary growth over the last sort of 15 years, where we've doubled the amount of copper that's being produced every year, and the world has managed to do that, and copper prices sort of didn't get too far out of whack over that period. They actually sort of fell back in the middle of it. And we're looking at a period where copper demand might even fall, if a number of these things sort of line up in the right direction. But it's not looking like a strong growth in terms of copper demand. And so therefore, for my part, there's not this crazy bull story. I've got to get in and I've got to buy the copper as fast as I can. Sorry, on the previous slide, I had a copper demand curve. Sorry, not copper demand, copper production cost curve, just sort of showing that's basically every mine that's a producer, and it's showing how much it's the blue ones, how much the mine cost is, and then the red ones the milling costs, and then the next green one is the shipment costs, and then finally the royalties. And it's basically showing even at today's prices, 30% off their highs, basically every copper mine in the world is pretty much profitable. There's a few obviously exclusions, but the vast bulk of all the production is profitable, and there's more production coming on over the next couple of years as a number of these expansions come into play. So if you actually needed to take copper out of the system, you're going to need prices to fall, another 30% or more to get back down to levels where mines would actually be shutting down if some of those scenarios came up I was talking about. So that's copper. Oh, and the final thing I wanted to do on copper was this idea about grades, because I see that all the time. People talk about, look, copper grades have fallen. We have to dig more. For every ton we pull out, there's way less copper. It gets done than what it was 10 years ago or 20 years ago. And that's absolutely true. The thing is, this has been happening for 150 years. It's not a new event. I've got a chart up here just sort of showing that copper grades used to be, back in the 1800s, they used to be 15% that you'd get. But that was a guy with a shovel and a pickaxe pulling the copper out. And so the costs, you had similar prices to what you do today. And then as you started getting more and more automated methods, you could economically mine copper at lower and lower grades. And there've been, even over the last sort of 10, 20 years, there's been a number of quite significant changes in terms of the way copper's mined, and it's moved a lot from sort of more normal mining methods to more sort of bulk mining methods in terms of how it's being pulled out. And we're seeing automation of all these mining machines is the next wave, where no longer do I need to send people down in these mines anymore. It can be, a lot of these machines can all be automated, which then just means that I can dig out less copper and still make a profit on it at those rates. So I guess falling grades, absolutely, but we've had that's just a factor of where we're coming